Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 13th of February, 2024. Well, tomorrow's Valentine's Day. I don't know if we're going to get a kiss or get slapped around. It's going to be something. Today was all about hot inflation. So let's go there before I do any of the other talking and talk about this. If you look at the CPI numbers, and you can always hit pause here if you're watching the video and you can see them, they came in across the board much higher than the market thought. Price increases, medicine, auto insurance, hospital stays, all sharply higher, and shelter costs. And the Fed keeps looking at shelter costs, and they're just not going down. And I have a problem in understanding why they should go down right here, because there's a shortage everywhere. And as we get into the spring and summer, the demand's going to pick up. I was watching today some of the brokers out of New York. They brought on real estate brokers on CNBC. And what is going on? And the market is hot there. It's always hot, very rich, as you know. Price is insane. A lot of cash buyers, but they're also looking at mortgages. And as rates were falling, the word is were falling, they were picking up interest. Now, you saw today that you went up to 4.32 in the 10-year note. So we were in a market that was under 4% at the beginning of the year. And now here we are at 4.32. And the question is, what's going on? Before we get there, I'll answer that, in my opinion. Tomorrow we get the Mortgage Bankers Association. It's the only real news of the day that affects the U.S. economy. And we'll get some more API numbers. Well, we had API tonight. We get the EIA in the morning. So look for those numbers. But you can see we added 8.5 million barrels, but we took out more in the gas stocks and in the heating oil. So let's talk about today and what it is, because that's really what it comes down to. I've been prepping you and saying you have a bunch of events coming. I called them the dance. You had the CPI, the first part. Then we're going to get PPI. And right behind it, in the tri-step, you're going to get NVIDIA's earnings next week. I'll start with NVIDIA. NVIDIA is price perfect. That doesn't mean it can't go higher, but it's price perfect. In other words, the market just keeps expecting it's going to go, and not stop. In fact, it's never going to stop. It's leading the AI charge, and it'll keep going. Well, everything became concentrated in the market, and we'll see. Today, what stock held up well? NVIDIA. Take a look at it. Unbelievable. Everything around it collapsing, it did fine. Lyft took off crazy today. If you want to see what a short squeeze looks like, somebody had an option play on after earnings. That's what I think, looking at it, as a guy that's been in them plenty of times, owned a brokerage firm, owned stock firms, commodity firms. So I've been there, know when somebody looks like they're caught, and somebody I think got caught. That is a stock that went up at one point today. I think it was 65%. You heard me. And then I watched the thing collapse as they bought their way out of the market. In other words, could have been a blowout by a firm taking somebody out of the market in a big position in options or whatever. But I was watching it going, I know what that's like. I've done it to people. You don't have the money, you got to come out. It's really that simple. So, was today the end of the market? Not at all. Normal corrections, forget peak to trough ones. Normal breaks in the market are 3 to 5%. Which market got hurt today the most? The weakest, the Russell. Which market has everybody been talking about? Analyst after analyst on TV has been saying, you got to own the small caps. It's broadening. The rally is broadening. It's the sucker play. It's not where the market's been. The market is not in the broadening phase for that. It's for the large caps, but not for the small caps. They're at the enemy end of the Fed. The Fed is not through raising rates. If you think the Fed now is going to raise rates cut rates anytime soon, I don't know what planet you're on, but you're not on Earth, right? Forget March, isn't going to happen. There's no reports that are going to change that 1, 2, 3 in terms of normal economic reports. As for whether it's going to be the spring months or summer months, I don't know. But if the data stays strong and it's anything like we're having right now, forget it. Then we're going to try to extrapolate and get rid of the noise at the end of the month in the PCE. So I view this as a normal correction. Not the peak to trough 10, 13% correction that you normally get. It comes in stages if it comes at all. So this is the first step where the market's ahead of itself. There could be a couple of days of this. It's not uncommon. You get a down today, a hard one. You get an up tomorrow. Why not? You can go back and forth with this dance for a little bit as the market puts itself back in the balance. This market has gone straight up for all purposes in the stock indices from October 26th, 27th till now. Keep that in the back of your mind. When you take a look at the mark, well, I don't know where we'll end up because we're only halfway on the week, but we're down 1.44%. When you look at the chart action, we've had these breaks. They're not uncommon. They have resolved themselves each time back to the upside. What about the pattern? You broke the bullish pattern. That's history now. So with today, and I want to take today's action off. Coming into today, pretty constant pattern that you get one of these breaks, then you start making higher lows, higher highs again. I think you'd agree with me. That is pretty much what you've had. When you look at where the market stopped, this is why I'm not as bearish as so many people. Tell me the number that these breaks have stopped at, the zone, the 18-day average each and every one of the times. So that's the first thing. I don't know that this market's a buy, but what I know is so far it's not saying it's a sell, all right? I think that's important in understanding. Where did the market stop? Well, when you look back, I wasn't wrong. I said, you're right at that upper Bollinger Band area. Each time you get there, you get a correction. Did I know it was going to be like this? Of course I didn't know that. And you lost your momentum. So when you lost the embedded reading, you finally lost it. You can see that. Lost it on the close, and you're not gaining it back right away. So I can expect this lolly-dolling around here for a little bit as it waits for the other shoes. It's the same thing that's going on to a degree in the NASDAQ. Look, you can't disagree with me. If you do, I don't know what you're looking at. What number did we get up to on Friday and Monday? The Bollinger Band. So as a minimum, what I teach is smart money was taking something off the table. I don't think they took their full positions off because you were still embedded with the reading. When you lose the reading, and that's the close of business today, I think they bail on the positions. And I think you go back to a clean chalkboard and you say, okay, let's see what next is on the horizon. When you look at the Dow, you lost the bullish reading. You didn't get up to the Bollinger Band. You did it back here, but you didn't do it here. And again, these are the first reasonable breaks of the year. Applaud them. They're not your enemy. You need markets to get back in balance. I can tell you, I told my subscribers, I'm going to put out recommendations. I'm going to cut down the amount of trading. I said, I'm going to lose some money when the market here spills over to other things. And it's exactly what happened. Was it big today? I don't know if $280 is big, but that's what I was wrong on the rec, and I have no positions on in the futures markets, okay? So, honestly, I breathed a sigh of relief. I closed my screens and I went and watched some TV later in the day. I know people don't do that. I do. And the reason is, had to clear my head. Okay, what have we got here? And I view it as a correction. I don't know that it's the beginning of a downtrend. The fundamentals certainly don't look like that in the stock market. And this is the market that I think people overdid it. You're still caught in the basic sideways action. This could be a base. It could be, but it hasn't told me what it is. The rally was a lower low to a higher high into the Bollinger Band and got thrown right back. That's what I know. It's not the pattern of higher highs, higher lows, or lower highs, lower lows. And it got overbought and it's corrected that right away. When we come to the 10-year note, this is the first challenge of the 100-day average and the Bollinger Band. Now, are we embedding is what I have to know. So I come back to where the process begins. And again, your slow stochastics won't match mine unless you're one of my paid subscribers, then I'll give you the formula. Day one of embedding was Friday. Day two, day three was today. So you are embedded. So until the red line turns up and over 21, Yes, there was some short covering, but I don't think the pros came out of their complete shorts. You have to get that red line over 21 for them to come out. And I think on rallies, the market is going to find willing, short sellers. 5-year note, did you embed here? You tell me. Here we go. So day one was Friday, Monday, today. So I'm going to repeat. I can see where there was covering of shorts. Absolutely. I think there was a certain amount of money, even by the most bearish of traders, taking something off the table at the 100-day and the Bollinger Band. But I think there's going to be on a good rally. The word is a good rally. Short sellers until that red line closes over 21. Then the dollar. Well, you're up to the upper Bollinger Band. All you did is fall back for the support. You surprised the market, no question about it. You're still overbought, not embedded. Again, if it wants to take off, if this market gets more reports that say inflation is not being beaten, the 107 area is a very possible number. You come back, it's right up to these old highs in that 106, 107 area that I'm looking at. I have some other work. The price counts carry you up into that area. And obviously, if the dollar's up, the euro's down, your other currencies are down as well. Look at how they got thrown back today. You don't think that was a surprise for a lot of these currencies? Of course it was. And now they've got to sit there and figure out, okay, what do I do with this? This is the kind of day where you sit back, you walk back from the market, and you don't be a hero right away. You need the market to settle in for a little bit with all that's going on. Bitcoin, not even phased. All it did is move to the right-hand side of the Bollinger Band. So it had a couple of days over it. It's embedded. It's still, in my opinion, going to be bought by the pros looking for higher prices till that embedded reading is lost. When you look at the energies, they were bullish all day long. They didn't get it all set back by the higher dollar or the inflation scenario. And there's really, if you look at the Mideast, there's a real attempt here to get Israel to agree to some form of a truce. World pressure is insane on Israel right now. They don't want them going into Rafah. They don't want to hear there's 200 more killed overnight and this and that. I'm talking what the world wants. Israel's point of view is very different. What it will take to make a truce, I don't have the slightest idea, all right? But is it impacting world trade? We know it is. Is it impacting Red Sea oil shipments? We know it is, but that doesn't change anything. Now, today, we also saw that OPEC came out with its projections. Thursday, we get the IEA numbers, all right? So you want to look at what the two are going to be. I think tomorrow, by the way, I said IEA, it's EIA is going to be tomorrow morning's oil numbers. You get these letters are all crazy. But we're going to get then the IEA, the International Energy Agency, and they have been at big odds with what they think versus OPEC. OPEC still thinks a lot of growth coming in the world. They are counting on China. Here's what their reports read. They are counting on China growth, and they are counting on rate cuts, okay? Both could be very faulty. And that is where their growth picture is based. Number one, the rate cuts were pushed back today. Any way you want to cut it, they're not happening in March, and they're probably not going to happen until now it looks like June. And if we get further inflation numbers, it could be in the fall, if it's at all. It's like a poem, in the fall, if at all. But that's basically what it could be. So I don't know that they're right on what they're saying right there. But the trend is up. That's all I care about. It is overbought, but the trend is up. You're overbought in WTI. You might go to the Bollinger Band. And these are the most recent highs that you've been recently. Take a look. You haven't been at these numbers back since December. Okay? You started off, you had one spike, you really lost a lot of steam. Now you've clawed your way back up, but I would think that you're overbought into the resistance area again. Not so for gasoline. And what did I just show you? Fuel costs are there, and they're going to be there on the next report. Take a look at what this market's done for February. You've gone from 236 up to 263. It's over 10%. That's not in these reports yet. That is forthcoming in your next set of CPI numbers. And you have the same thing happening in heating oil. The market that keeps coming down is natural gas. I don't know where the low is in this. I have traders writing me. Today it was funny. Some of my traders write me and they even laugh as they're writing. Ira, do you think this is where the bottom is? I don't know where the bottom is. Nothing in my work is saying anything other than you're under the Bollinger Band. You only stay under it 5% of the time. But until you lose this bearish embedded reading, prices can go lower. And on good rallies, the pros will keep selling until you get, like you did in the stock market, one of these corrections of a 3 to 5% day where all of a sudden the market says, okay, I've gone far enough and I've gone to an extreme. That's how I'm reading where we're at right now. So that's pretty much my view. My view for you was simple, all right? Number one, it's a correction. Number two, it's not a bear market break at this point. It's no more than a normal 3 to 5% correction in stocks. The impact, though, mentally, is that the CPI, take it out of your head that this Fed is doing anything anytime soon. If anything, the members sat back and they were relieved that what they have been telling you that nobody wants to listen to is, number one, the last mile to get inflation down is a hard one. Number two, they expected bumps along the way. They're getting that bump along the way. That doesn't mean that they've lost their battle with inflation at all. It means that they keep rates restrictive for a long enough time where it embeds and it starts in the last mile, driving it down. Otherwise, in order to get it going, I know you don't want to hear this, they could raise rates. If inflation rears its head and if they don't see employment fall, why couldn't they raise rates again to make it more restrictive? I know you don't agree with it. Most people don't, but show me the facts. I mean, that's their job. Their job is they're wondering, what is the restrictive number on the rates? They think they're there, but they're certainly not coming off and going to an easing policy at this point in time. Not anytime soon. So you define what soon is. I'll define it as it's not going to be before the, late spring report in May. So that's where basically I'm at. That'd be the first one that's a possibility. June is more of a probability if the restrictive policy starts dropping things down. If not, and if employment stays strong and we get another strong jobs numbers, you got to think different. I'm Ira. You have yourself a good day. Go to our website at iraepstein.com under the free offers. Have a field day. Take care.